Hey, good afternoon, everyone. Are you a buyer in this real estate market and you're wanting to wait? Stay tuned as we go over why that could cost you thousands of dollars if you wait a little too long. Hey, everyone, I'm Hector Aguilar of Aguilar Realty Group together with.
Ben, your agent.
Hey, thanks again for joining us. Today is Wednesday's hot topic. And of course, what's the hot topic of the day or of the week these past few days? Mortgage interest rates, right?
Yes.
It's all over the news, right?
Uh-huh.
It's interesting that we've been working with a lot of buyers at the moment. And we noticed that many of our buyers are telling us, "Hey, Hector and Ben, I want to wait it out. I want to wait it out because prices are too high, and also because interest rates have gone up, and we just want to see where the market goes, and we're thinking that we might be buying for less, in a year or maybe even two." And
Right.
honestly, certainly it's a concern that many buyers have right now. But I want to share with you today, Ben and I want to share with you today how that thought process could actually cost you more money over the long term and how
Right.
you might be missing out on an opportunity to buy a house right now versus another 6 months or 12 months down the road. Okay.
Right.
Um, waiting could cost you thousands of dollars. And we can evidently see that by just looking at the interest rates. Over the last 6 months, we've seen the interest rates go from the low 3% to, as of this past week, 6% on average on a 30-year mortgage. That's
Yeah.
double the interest, and it could be a little bit higher. Um, Ben, what's the conversations that you're having or seeing right now in terms of why the interest rates are going up? What have you heard more or less in the market, or maybe from some of your clients?
So the first thing I think of is inflation, right? So
Inflation.
the higher the inflation, the higher, which is tied into what you're going to talk about later with the Feds, it's going to tie into the mortgage rates, and unfortunately, we're not in control of that. So
You're absolutely right. You hit it right on the head, right? What is the current inflation rate right now as we see it in the news and we're watching Fox Business News and MSNBC and it's all over the news? Is the
yeah,
current inflation rate right now is it about 8.5% and probably climbing? I think overall the feds were looking at inflation rates being at about 8.2%, but they were surprised to see that inflation was actually quite a bit higher, about 0.5% higher than what they expected. So what ends up happening? The Feds reacted in their last meeting last week, and in the financial markets, it had been anticipated that they were going to maybe increase the Fed's fund rate from about a quarter to 0.5%. But when it was all said and done and the dust settled, the increase was about 0.75%, right?
mm,
And so why did they do that? The reason why they're doing that is because they're trying to press down the inflation, right? The cost of goods, gasoline, the cost of food, the cost of transportation, all those things that add up that are making our dollar value be less than what it was at the beginning of the year or even last year.
mm,
So that's one of the tools that the Fed funds uses to kind of curtail or press downward on the inflation rate, right? I've been looking at some financial news and just kind of keeping a thumb a little bit on the next federal funds meeting, which is going to happen in a couple months. And based on what they're seeing, they're estimating that the Feds could potentially increase the rate another 3/4 of a point or even another point. So let me ask you a quick question. What was the end result to the mortgage rates when the Feds raised the rates last week? What did we see happen, Ben?
last week when that happened, I think it just shot up the you talking about in terms of real estate.
In terms of the mortgage rates, yeah, you're right. They did shoot it. They shot up.
Mm-hmm.
At the beginning of the week, they were just at about 5.25, 5.5.
Yeah.
And that happened. And where did the interest rates go? On average, right now, they're at 6%. That's a
Yeah.
lot, right? That's a big difference.
It's
And one of the
crazy.
things I wanted to show you guys today was, as I pull up my payment calculator here, I wanted to show you what the difference between a 5.5% and a 6% rate. So the
Yeah.
point I'm trying to make is if the Feds get together in their next meeting in the next couple of months, and the financial gurus, Fox, all the financial markets, Fannie Mae, Freddie Mac, Ginnie Mae, that are keeping an eye on what the mortgage market might be in another 60 days, they're concerned that the rates are going to continue to shoot up, right?
Yeah.
At the beginning of the year, if you remember, Ben, we did an update of the market in January,
Yeah.
and we had actually gone through some slides, and you can find it in our YouTube video that we did at the beginning of the year. it was estimated that through quarter 2 that the interest rates might be at about 4.5%, 5%. Well, guess what? We're at the end of quarter 2, and the rates are much higher than what they projected. So the concern is that the Feds, if they increase their Fed's fund rate another 3/4 to a full point, come I think it's July, August, end of July, August, that's going to have a negative effect on what mortgage rates will do then. So if you're a buyer and you were kind of sitting on the fence at 3% and then sitting on the fence at 4% and sitting on the fence at 5%, and the interests haven't gone anywhere but up,
Yeah.
what's naturally going to happen if you continue waiting?
Your
It's going to
purchase.
be more, right?
Yeah.
It's going to be more. It's going to be a lot higher. So that's one of the reasons why we actually are recommending for buyers not to sit on the fence, to wait it out. Statistically, nationally, we're starting to see, just in the last 30 days, we've seen inventories increase across the nation at 12% over last year. What does that mean? Is that buyers are going to have more options to look at homes in terms of what's out there for them, what they like in terms of their neighborhoods, the areas, and more options. The other thing that's happened is that many buyers that were approved earlier in the year, let's say at 3%, that now got approved at 4.5%, are no longer approved because interest rates are 6%. So they have to go in and get reapproved.
Yeah.
So typically what ends up happening, Ben, is sometimes some of them decide or discover, not decide, but discover that they no longer qualify for that mortgage that they were looking at. So that's another fear, right? Another concern that you should have as a buyer.
Do you want to address that?
Yeah, I do. Actually, I'm gonna look at a calculator here real quick. Give me a second as I open up my mortgage calculator. I want to show you a couple of tools that we use to be able to show you what that payment difference might be. Give me 1 second.
And everyone, please heart and like, whatever you're on, StreamYard or LinkedIn or Facebook, YouTube. Hit that like, hit that heart. Definitely helps us out. And I think one of the biggest things that if you're a buyer in a situation like, hey, I unfortunately I'm qualified, but now my purchase power is lower. There's still other options you can still do, like there's so many loan programs that we can help you out with, our preferred lender can help you out with, that you might not know. And there's down payment assistance and whatnot. And or you can look into your investment and portfolio. Maybe there's some other investments that you have that can compensate, helping you with your income, right, Hector?
Absolutely. I think right now, for the most part, most buyers are thinking about getting into a 30-year fixed rate loan, right? And they may not be considering that there might be other loan options for them that could help them keep their payments low and actually see if there's other loan programs that might fit their budget as well. For example, there's an adjustable rate mortgage product, and I know it could be a little scary. Most people are like, no, I don't want an adjustable, but hear us out. There's an adjustable rate mortgage product that's either a 5-year fixed, a 7-year fixed, or a 10-year fixed that could potentially get you into your mortgage, into your home, at a lower payment than the going 30-year rate. And in order to tell you what those rates are, I mean, we're not mortgage professionals. We can refer you to a specific mortgage professional just to show you or discuss with you what other options might be available. My personal favorite right now is a 7-year mortgage, fixed for 7 years. It's an adjustable. It'll adjust maybe once or twice a year after that initial 7-year period. But guess what? You have the opportunity to get into a mortgage at a lower interest rate right now than the 30-year mortgage. And then in time, if the interest rates do drop, you can refinance and get into a 30-year fixed, right?
Exactly.
That's one of the things that I think would probably most buyers are not considering, and probably is a good question to ask their mortgage loan officer in terms of, hey, what other programs might be available that could get me into a home that's going to give me the payment that I'm looking for? Because look, the reality is not only are interest rates going up, not only are prices continuing to go up, but rents are going up as well.
Yes.
I was working with a rent client right now that's relocating from Texas, and they want to be somewhere near Cal Poly Pomona. And unfortunately, there isn't anything available under $3,000 in Pomona alone. Wow. I mean, within a 10-mile radius, and we're looking for 3-bedroom, 2 baths. I want to say that the average was about $2,850, And so, when you're renting, you're paying a mortgage. It's just not yours, right?
Yeah.
Whose mortgage do you end up paying when you end up paying rent?
There's.
Typically the landlord, right?
Yeah.
Typically the landlord.
There's.
And,
Hmm.
and you don't have any ownership benefits. You don't have the benefit of a mortgage interest deduction off of your tax returns when you file your income taxes every year. That's a
Right.
benefit that a homeowner does have. What's
Right.
another benefit of homeownership is, you can paint, you can design, you can remodel the home in whatever way you want, and you don't have to check in with the landlord, right? In addition to that, the biggest benefit to being a homeowner is that you're building equity for yourself and your family, your future, right?
Yep.
Um,
Hmm.
Many people who bought homes in the past, they didn't pay the prices they're paying now. For example, my mom, she purchased her home in the late 80s, 1987 to be exact, and she paid $87,000.
Wow.
But, and her interest rate at the time was 13%, if you can
Hmm.
imagine that, 13%, right? But over time, the market and time has actually given her and awarded her. Right now, her home is worth $700,000, and she lives in East LA. She's in a 3-bedroom, 2-bath, standard property, just 3 or 4 minutes from Cal City, LA, and it's worth $700,000. So, and I refinanced her when I first got in the business, Ben, many years ago. I was a mortgage banker, and as a mortgage banker, I was, I when I first started, I first went out to my family members. Hey, how can I help you? Let me look at your interest rate. Let me see if I can help you save some money. And I
Yeah.
did. My mom was excited that I got her from a 13% to an 11%, and then from 11% to like 9%, and then
Wow.
ultimately, I want to say I got her into like a 7.5%. And this was probably like in the late 90s, right? But I think a lot of buyers, tend to get stuck, and we're a little spoiled, honestly, because we were in a market where interest rates were at 3%, absolute historic lows, right?
Or two.
Or
Two.
even two, I think two and a half, two and three
That's
quarters were
great.
some of our clients that were able to get, refinance and actually have them purchase. But look, those times are gone, right?
Yeah.
Interest rates are now at 6%. And historically, 6%, if you look over the last 50 years, is still a very low interest rate. So, if you're a buyer, I honestly think that, waiting could actually cost you more money. Um, I know that many people are thinking like, well, the market's going to shift and maybe the values are going to drop. And, you're probably having a valid conversation. But the truth is that we're starting to see inventories increase. You have more options. And the powers that be, like Fannie Mae, Freddie Mac, the National Association of Realtors, and the Mortgage Bankers Academy, pardon me, Association of America, are all saying that um, they are projecting, pardon me, that the increase in value on homes is going to be more of a normal cycle, more of a 3 to 6% increase year over year as compared to 2020 and compared to 2021, where the increase in equity was about 19% on average. So, again, if you're thinking that values are going to drop, that's not going to be the case. I think overall we are seeing inventories increase, and we are starting to see some price adjustments in some markets, but we're not talking, hundreds of thousands of dollars. We're starting to see price adjustments in $10,000 or $15,000, and now we're starting to see a little bit more activity in those price points. So again, there's going to be much more opportunity for you as a buyer to get into a property now versus if you wait another 60 days, maybe 90 days to see if the interest rates go down. We're
Yeah.
looking at the statistics that show us that, again, if the Fed get together and look at inflation and it hasn't dropped, again, the financial markets are looking at an increase of about 3/4 to even 1% that they're going to take on the Fed's funds rate. And again, we're going to see mortgage rates go up again. So, in a nutshell, I think that most buyers are concerned. They have valid concerns, but at the same time, they could be risking not being able to purchase a home if they wait a little too long, right?
Yeah.
Traditionally, we know that June, July, August are really like the high months where people are making moves. Sellers are making their moves to sell and move to other areas or other cities or even out of state. And buyers, it's the time where they want to move because their kids are out of school. They have a little bit more flexibility, and they just have a little bit more time on their hands to go look at property. So, the point is I know that you probably want to wait. At the very least, I think our conversation may spark an interest in your mind to at least have a conversation with one of our mortgage professionals. Heck, you can even go to like a credit union to see what kind of programs they might have available. Talk to your local mortgage branch or your bank, either Chase, Wells Fargo, U.S. Bank, or even your financial institutions that might provide mortgage products, or reach out to us. Ben and I have preferred mortgage lenders that we work with. We can put you in touch with them, and you can have a conversation about, hey, what other programs might be out there that I could afford a mortgage payment and buy a house. And who knows, maybe if you can't buy a house because it's a little bit maybe priced out of your budget, you could also get into a townhome or a condo. Maybe take a little bit. You may need to sacrifice a little bit up front. Maybe it may not be your dream home that you initially purchased, right, Ben?
Yeah.
But at least you get into a property where you're paying your own mortgage, you're not paying the landlord's mortgage, and you're actually building some equity. So I know this week has been all over the news in terms of the mortgage rates, the Fed's funds rate, and our current economy with the current state of the inflation. I think if buyers wait a little too long, it could really cost you some money over
Yes.
time. You're talking about a difference of $300-400 in mortgage payment if the payment goes up another point. So, tie up your mortgage interest rate early. Reach out to us. We serve the San Gabriel Valley areas and the Inland Empire areas, Los Angeles, and the greater LA area. We'd love to help you out. I think, at least having the conversation with either Ben, myself, and a mortgage company could at least open up your eyes and your possibilities to being a homeowner. Ben, any questions before we close out today?
I think it's crucial that they do take advantage of it, like you said. Thank you for doing the training today.
Absolutely. Yeah, no, we want to be able to empower our clients and our consumers, even those that are watching us, to at least spark a little bit of a curiosity, right? Don't
Yeah.
let us tell you what to do or what you qualify for. Talk to someone, talk to a mortgage professional, see what your budget is, see what other programs are available out there, get a budget approved, then reach out to us, and we'll more than be willing to show you some properties in your budget in the neighborhoods that we can get some properties that you're approved for in their price range and help you buy a home. So
And
we're excited about the market. Go ahead, Ben.
more homes are coming back on the market. I
Yes.
mean, because of that, so
Yeah, absolutely. We're starting to see a lot more inventory hit the market. I know that in La Puente, we're seeing some more listings come to market. West Covina is taking some listings to market. We're seeing some more listings in Bowen Park. All our local communities that we serve, we're starting to see an increase in inventory for a couple of reasons, right? Number one is, again, it's the hot summer months, and sellers traditionally like to wait till June, July, and August to kind of put their properties in the market. So it's expected to see that inventory. But aside from that, there are some buyers, again, that have stepped away from the market as a buyer. And that gives you, if you're still in the market, an opportunity to have more choices to look at other homes that maybe you couldn't have competed with, maybe even just 6 months ago. So once again, reach out to us. Let us put you in touch with one of our preferred mortgage bankers. But then I look forward to working with you in terms of how you buy your home. And if you're thinking about selling and making a move, we'd love to sit with you too and kind of get you an estimate of what we believe the market be able to pay for your home in your market as well. So thanks again. I'm Hector Aguilar. This has been the Hot Topic Wednesday of the week. I'm so excited to be able to bring you some valuable information. And Ben and I look forward to helping you guys out in the purchase of your next home. Take care, everyone. We'll see you next week.
Take care, everybody.